Welcome back. Today, Julie and I are going to dispel first-time buyers myths, and we're going to let you know about the programs and the different financial tips. This is something that we've had quite a few requests, especially after the podcast we've been doing the last couple of weeks about buyers, and a lot of, frankly, a lot of really absolutely terrible information out there about what's going on in the market as pertains to first-time buyers. So what we're going to do, and again, this is because you all requested it, is we are going to be giving you a drill down on all the different first-time home buyer programs that are available out there. A lot of this stuff is, it's kind of sort of dry and droll, but the reality of it is you need to know it. Now, our notes for today's podcast, which you absolutely have to have, Julie and I spent a lot of time on these notes, are available over on our newsletter, harrisrealestatedaily.com. So make sure you go over to harrisrealestatedaily.com. You have to subscribe. The newsletter doesn't cost you anything. And then you'll have immediate access to all of our notes, and you'll start having the notes from that day's podcast emailed directly to you. The newsletter has been an enormous success. Did I tell you the open rate's close to 50% now?
That's awesome.
Yeah, so the newsletter has been a huge success for us because it's obviously a success for you. So subscribe to harrisrealestatedaily.com and get these notes. These are the notes that you're going to want to have when you're making your social media content, when you're talking to first-time buyers, when you're educating other agents. We know there's a lot of YouTube coaches that are using our notes from our podcast, and that's fine. We give them permission to use the notes. Those of you who are listening right now, who are YouTube coaches, who give Julie and I credit for where you're getting our information or where you're getting information, you're doing the honest, ethical, frankly, moral thing. And for those of you who are just using the content, not giving us credit, well, maybe you ought to think about doing that, at the end of the day, right? So, moral of the story is, this is your source for this information, and you want to subscribe by going to harrisrealestatedaily.com. Julie Harris.
All right, again, this is a special request from our listeners, coaching clients, etc. First-time buyer myths, programs, and financial tips. You can get the notes, but follow along with me. While affordability challenges do exist for some, many first-time homebuyers are still finding ways to enter into the market. 32% of all home purchases in 2023 were made by first-time buyers. Now that's up, it's not down. The headlines want you to believe it's down. It was only 26% in 2022. The myth that first-time buyers are priced out is dispelled by the numerous financial programs designed to reduce home purchasing costs.
Now the fascinating thing, Julie, I don't know if you've taken this into consideration. What did interest rates do between 22
and 20? They went up.
Exactly. So because what's happening is it's available inventory that's ultimately controlling home sales even more than interest rates.
And demand. There's so much demand.
100%. But when you add to this the lowering of the interest rates, where I talk about that, as rates are falling, now you can get a rate, 30-year fixed around 6%. Well, for sure, rates are going to go down to 5.5%, maybe 5.3%. I've been hearing that sometime by third quarter of 2025. What do you think that's going to do when all of a sudden owning a home with 3.5% down is less than what renting that house would cost? Do you think that's going to cause the housing market to go bonkers? It will.
That's right. So here are things you need to know about. Now, some of our listeners are mortgage loan officers, and that's great. If that's you and your company isn't offering this, you need to educate yourself and, ask what's going on with that if you're a lender. But for my agents, you need to know enough about this that you can interview different mortgage lenders and make sure you're using some that have these special programs, especially if you're somebody that works with a lot of first-time buyers. And if you're not, you're missing out on 32% of the market. So you should take first-time buyers seriously.
We should actually drop in what you just said. So you are working with a loan officer, and I know, Betty brings you guys donuts every week on your real estate meeting, and they invite you to their monthly golf tournament and the rest of it. But you need to make sure that Betty actually is qualified and actually able to do FHA VA loans, because not all lenders are. Now, there's far fewer lenders in the industry than there were, say, 5 years ago, let alone 24 months. And so chances are the lenders that you're working with is able to, they're legally allowed to do these types of loans, but the requirements to do these government loans by a mortgage broker, a mortgage lender, are much more stringent than just if they're selling loans that weren't government backed. And I want you to be very careful, and you need to go to, what's the site?
HUD.gov.
HUD.gov to make sure your lender is actually on that list. Now, even if they are, that doesn't mean the loan officer that you're working with wants to or knows how to do these loans. These loans are definitely more tricky, definitely require more patience, more paperwork, more process. And frankly, they do pay more commission, but a lot of loan officers are going to be more focused on refinances or focused on certain other things other than these types of loans. So you are going to face headwinds when you discuss with your loan officer things that you're going to learn on today's podcast, and you're going to discover they don't know what the hell you're talking about. That's not a loan officer you should be sending a majority of your buyers through
Or
to.
certainly first-time buyers. That's
Thank,
right.
thank Betty for her donuts. It's time for you to find somebody new.
Yes, and you want a lender, and there are lenders that actually specialize in helping first-time buyers, and they're really good with all of these programs. That's who you're looking for. Okay, programs that help first-time buyers. We're going to do a light drill down on these, and of course, you can get the notes as well. So, first-time buyers have access to many different programs. FHA is the one you hear the most about. Why? Because low down payments as little as 3.5% down. And lenient credit requirements for buyers with credit scores of 580 or above. How do you find out about your credit score? There's lots of different companies who do that. I think the least expensive, most efficient is Experian.com.
Didn't we see that it's actually as 550 and below?
I've seen some 560. I don't know about 550, perhaps.
Okay.
But so how does a buyer know what their credit score is? You go to Experian.com and find out. And contrary to another myth, when you use, for example, Experian, it does not hit your credit just because you pulled your credit. As long as you're the one who's pulling it or your buyer's pulling their own credit, it will not ding them the points.
We should say this too. So you're going to go to your new lender. His name is Bob. You know, Betty's been left on the wayside. Turns out Betty doesn't really do these types of loans. Now you're dealing with Bob. Well, Bob's lender there's something called overlays in the mortgage industry. So even if you've gone to HUD.gov and you've read what the requirements are and so has your borrower, well, guess what happens? There's something that the mortgage office or the actual mortgage company added requirements that they'll put on top of whatever the government requirements are. Those are called overlays. And the overlays could be additional down payment, could be a higher credit score, could be other things that make it so your buyer no longer qualifies. So even though Bob does loans, even though he seems like he's a really nice guy, even though he's going to bring you better donuts to your weekly office meeting, his overlays might make it so that your buyers can't never actually get qualified to work with him. And unfortunately, you might also find that Bob might make more money flipping the buyer to a different type of loan. So you're going to have to do this homework on your own. But do expect that as you're building the business, you're building your momentum into the new year, you're going to have to start making sure you're working with really kick-ass loan officer, people that have their skills going on. Otherwise, they're going to slow your business down. You're going to work your ass off to generate all these buyers, and half the buyers are going to, all of a sudden magically not be qualified. Not that they're not qualified, but they weren't qualified with Bob. You guys understanding what I'm saying?
Yeah, and you should know when you're interviewing lenders, especially if you're a regular podcast listener and you've got these questions in your head, you'll know because a great lender that has all these first-time buyer programs, it's going to be like a toolbox. They'll be like, yeah, I know about this, and I've got this special program with that, and I've done 10 deals last month just like this. They're not going to be like, let me Google that.
Right. And they'll probably say, well, did you know about this? Did you know about that?
That's what you want.
Yeah. You want somebody that's like, we always give Mark Yerke, who's still doing mortgages, by the way. When Julie and I sold real estate in Columbus, Ohio, there was this Yerke mortgage, which is owned by the Yerke family. And they were so unbelievably good with, first-time buyers, but also really...
And low down payment buyers.
Down payment buyers. Mark was so flippin' brilliant with those guys. I cannot... Every time you'd put a buyer with Mark, even if for some reason the buyer wasn't quite ready, he would get that buyer ready over the next 3 to 6 months, helping him fix credit issues or whatever it was. And then he would gestate them into being a real buyer for you.
It was good bedside manner from a lender perspective.
It was good bedside manner, but it was also very professional. And that guy knew his shit like no other lender.
Yes, probably the best.
And then we also had a Midland lender, because back then, of course, this isn't really true anymore, but in some markets it is. But you used to have first-time buyers, which use mostly government financing. But now in most markets, government financing is even going to work with all but your very upper-end buyers, your jumbos and your super jumbos. So in most markets, one really great FHA, VA, type government lender is going to be all you need. Moving up from that, you're going to want to find some jumbo lenders. If you're working with that in that price range now, you already know who the good ones are. But their programs are also incredibly creative. They're all kinds of different ways that are about down payment. So learn all that stuff. Julie, so let's move on.
Okay, so there's also conventional loans with a 3% down payment. So that's Fannie Mae's Home Ready and Freddie Mac's Home Possible loans. Those offer even lower than 3.5% of FHA. They're 3% down options. These are ideal for low to moderate income buyers. Okay, so VA loans. No down payment is required. No private mortgage insurance or PMI. That saves buyers on monthly costs, keeps their payment down. USDA loans. No down payment for eligible buyers in rural areas. I do have quite a few coaching clients that use these USDA loans. I think you had a call with somebody doing that the other day.
I did. Somebody in our EXP Realty family, that's all they were doing is USDA, and they didn't realize that there was no down payment required.
Yeah, it's pretty awesome. And lower mortgage insurance than FHA loans. Now, down payment assistance programs. Many states and cities offer assistance programs. Examples include, there's tons of them. I'm just doing 2 examples. The Cal Home program at California provides financial assistance for low-income residents. And you might be surprised, sometimes low-income in some of these expensive areas is like less than $75,000 a year or something. It's not like $2.50.
Yeah, you want to bet
right?
low-income in California is less than $750,000 a year?
I said 75.
I know,
That's
but I
it.
amped it up.
But yeah,
As a
you're right.
joke.
It could be. It could
Yeah.
be. You never know. And like New York City, right? So Georgia Dream Homeownership Program offers down payment and closing cost help for Georgia's first-time buyers. One of my favorite ones is the Good Neighbor Next Door program. The lenders call that GNNDP. The HUD offers a 50%. I didn't quite believe this when I read it, so I did more research. HUD does offer a 50% discount for law enforcement officers, teachers, firefighters, and EMTs purchasing homes in designated revitalization areas. So this is mostly urban.
Discount of what?
From the purchase price. I'm not kidding. The program allows down payments as low as $100 with FHA loans, and buyers must live in the home for 3 years. So there's an occupancy of 3 years required. Properties are limited. Eligible buyers need to act quickly on them. The HUD Home Store provides current listings for this program.
Okay,
here's how they do it. Here's how I can tell you. It's very cool.
These are homes that are owned by HUD.
Yes.
Okay, that makes sense. So you're saying if you're eligible, a home owned by HUD, and the website for this, what we're talking about, is in our newsletter. So make sure you subscribe to harrisrealestatedaily.com and go down to the Good Neighbor program. It says HUD right by it. And then click on the link that's going to be in the notes. And so you're saying they go to this website, and if they're eligible, firefighters, teachers, EMTs,
First responder types, yeah.
if the house is listed for $200,000, they can get it for $100,000?
Yeah, and here's how they do it. And you guys can read about this on HUD. I'm not a mortgage loan officer, neither are you. We're just giving you the breadcrumbs here. Okay, so HUD does a silent second for 50% and does not require any payments on it.
They do a second, and then they don't actually file the second?
That's it. It's a
That's
silent
insane.
second. I know. So you're literally buying the house for 50% off list price. It's filed as a second, but it's categorized as a silent second, no payment required. And no interest, of course, because there's no payment. And it's all recorded. It's all, it's a government program. You have to qualify. The biggest requirement is the 3-year residency.
Well,
and I don't think you can do it as a rental.
You have to find a house, right? That's the first thing, right? So, yeah. So when people say first-time buyers can't buy homes, first-time buyers who are working with agents that don't know this information and loan officers that don't know this information are the ones that aren't buying homes. Other than that, there's absolutely no reason for you not to buy a house. And how about this, guys? Federal Home Loan Bank, FHLB grants. A grant.
A grant is something you don't have to pay back. Offers $5,000 to $7,500 in down payment or closing cost assistance via participating lenders. Remember we said you got to have the right lenders, right? Okay, and I believe on HUD you can, and I think NerdWallet and some of the other ones, I think Investopedia you can do this too. You can actually enter your zip code and it'll give you a list of lenders that have these programs.
Right, and get our notes from harrisrealestatedaily.com. All right, so next question. Can first-time buyers combine these programs? Can you do a no down payment program, get a grant? Can you combine all these programs, Julie?
Yes, you can. First-time buyers can often combine multiple programs for maximum benefit. For example, an FHA loan can be paired with a local down payment assistance from your city or state, or VA loans with closing cost grants. Working with a knowledgeable lender helps first-time buyers layer these options and save the most. And that is the type of thing that Mark Yerke used to do. He would say, you qualify for A, B, and C. Let's do all 3 of them.
So, Julie, imagine if you are an ethical real estate professional designated agent and you're sitting in front of a prospective buyer and you're trying to explain to that prospective buyer what makes you different and you're sharing this type of information with them. Don't you think that when that buyer is probably also, maybe they've already spoken to another agent who also asked them to sign an exclusive contract, and now you're asking them to sign one because it's the new guideline and you are showing all these added benefits and your level of knowledge with trying to help them solve a problem, which is buying a house? Don't you think this type of information gives you an unfair advantage? Guys, this is just our podcast. Imagine when you become an ethical real estate professional designation agent. Text the word buyer, BUYER, to 47372. Get on the list for the new program. It's going to be released sometime in the next couple of weeks, I'm hoping. So text the word buyer, BUYER, to become an ethical real estate professional exclusive buyer agent designee.
All right, so what about homeownership versus renting? What are those financial benefits? Owning a home offers significant financial benefits, especially in building wealth through home equity, which of course renters cannot access. We have been talking about this. Net worth of homeowners versus renters. The median net worth of homeowners is $255,000 compared to $6,300 for renters. Why is that? Well, paying down your mortgage. As payments are made, the loan balance decreases, increasing equity. That's called forced savings. Property appreciation. Homes typically appreciate over time. For example, a $300,000 home appreciating at 3% annually, which is actually very low in the past 10 years or so, could be worth around $403,000 after 10 years, probably even more. This year, we're on track for nearly 5% appreciation year over year.
Rates go down. What's going to happen to appreciation or inflation? Home prices are going to go up by more than 5% per year.
Exactly. Now, let's do a current market snapshot. Again, talking points for our listeners. Home prices, mortgage payments, and rent. As of mid-2024, the average home price, according to the St. Louis Fed, is $501,700. That's amazing. The average mortgage payment is $2,209 per month. That's according to NAR. The average rent is around $2,100 to $2,200. So it's running very close, average rent and average mortgage payment. That's good to know, right? Okay, so that's what's happening as today's snapshot.
Yes, and Julie, that's with today's interest rates. But as interest rates fall,
then we're going to flip-flop that a little bit. We'll have the monthly payment on a mortgage will be less than it will be on rents.
Now we're going to get to the bottom line. When people say it's harder now to buy your first home, based on everything we just told you, if you've maybe not been in the real estate industry for more than a couple of years, you've owned homes before, haven't you? Do you remember a better time or an easier time? And I do mean the word easier to buy a home now, despite the high prices with all these different programs. The reason that buyers are complaining about not being able to buy a home is they've been reading the salacious headlines for too long. They actually believe it's that they're locked out of buying a home. They're not meeting with knowledgeable, confident agents that know how to solve the problem of helping them, get a mortgage, let alone a loan officer. They're not aware of all these amazing programs that are out there. Julie just gave you one where they can get 50% off on a house. Come on, listener. This is the best time to be a buyer, especially a first-time buyer.
That's right. So are homes easier to buy today compared to the past? Again, that's the headline. I heard a big discussion in my own CE class in Texas from agents saying, well, I think the biggest challenge out there is that how's a buyer in today's market with an average home sale price of $500,000 ever going to come up with a 20% down payment when rates are at 7%? It's like, oh my gosh, you have to have some education in your head about
that's
this.
Somebody, when agents say stuff like that, and they're so blissfully ignorant or knowingly ignorant of the facts, So obviously I think, they just haven't taken the time to do the work to know actually the truth. They haven't been exposed to our podcast.
That's right.
But they're also frankly spending way too much time reading garbage headlines written by people that know nothing about real estate and not actually out there trying to be in alignment with their highest and truest purpose on this planet, which is being a service to other people. And as a licensee, the people you're choosing to be of service to are your buyers and your sellers. You are morally obligated to know this information, or you're not going to be successful, especially in this new market. The changes that pertain to exclusive buyer agency, if you're not going to be at least able to cite the type of information that we shared with you today when you're talking with buyers about working with you exclusively, why would they work with you? Because they know you, they like you? Well, guess what? They know 10 other realtors as well. They're not going to work with you. If you don't get buyers, you're not going to get sellers. you're not going to be in the real
You're
estate
out.
business. You're out. You just basically, because of your unwillingness to actually do the work and learn what's necessary, you're choosing to fail. That doesn't make any sense to me.
And by the way, the script is not you have to sign it because it's required.
Right, exactly. She means the exclusive, right? No one's going to sign that. They're going to walk away and they're going to go to the seller. They're going to go to the listing agent, or they're just going to get frustrated and they're going to start reading the headlines thinking it's, the train has left the station and they can't buy a house. And whose fault is that going to have been? Yours, for not having been in alignment with your highest and truest purpose, which is being of service to them and helping them to go through the maze that's required to buy real estate. You guys, we're not going to be relegated to the trash bin of history because of AI. The complexity that enters into any industry like this creates more opportunity, not less, because they will need somebody to decipher all the hieroglyphs that are making up all the complexity of this new market more than ever. They're going to need you. You have to be worthy of who they choose to work with. That's the reason we've created the Ethical Real Estate Professional designation. You want to get on the list to learn more about this program. Text the word BUYER, BUYER, to 47372.
All right, so our conclusion, while programs like FHA loans, the Good Neighbor Next Door program, these do provide valuable assistance. We do have higher home prices. We do have tight inventory in some areas, and that does make it more challenging, especially if you're wandering around the real estate wilds telling everybody it's 20% down and rates are too high. Don't do that. You have to know about this stuff. Mortgage rates of around 6% and going down are favorable compared to historical highs, and affordability can be a concern for some, but less so when you educate yourself and you're working with the right lenders who utilize as many special programs as possible. So now that you're educated and hopefully you're motivated, it's time for you to get into action. So do what we've coached you to do on today's podcast, get into action, and back to you.
Your homework from today's podcast. Obviously, you want to get on the list to become an ethical real estate professional designee. You obviously want to join Premier Coaching. Go to premiercoaching.com, and hopefully you've already subscribed to the newsletter, harrisrealestatedaily.com. Those are your 3 assignments. We are going to do everything in our power, as Jules just said, to keep you educated, motivated. It's ultimately up to you to get into action. Don't wait to some date in the future to build your momentum. Do it now. Things are going to become much, much harder for the agents that don't have the skill set that's required in this new market. You're already feeling it, aren't you? So let's set aside the dismay and the doubt and the confusion, and let's accept the facts. You are in the right place at the right time, assuming you take the right actions. You know what to do. Have a fantastic day. We'll talk with you on the show tomorrow.